distinguished participants. I have to admit I'm not fully prepared because things are changing so rapidly in terms of the economic outlook. It is just, I mean, I work in a variety of countries, and typically things change in countries that are challenged. But here in Zimbabwe, I think you beat anywhere else where I work. But before starting to speak, let me, I know there are many distinguished guests here, and let me say all protocol observes, because I don't know exactly who to recognize and so forth, so I hope you forgive me if I use that phrase. But I think the easiest way to present the outlook is to go back to what we presented in February. This is a little publication, we have copies for all of you, and it has a bit of a perspective on the medium-term outlook. And I would like to use that as a starting point. And then to tell you this is what we had at that time, and this is how it has changed. This is what really the current challenge is. I mean, you're Zimbabweans, most of you. You know there have been quite dramatic developments in terms of announcements of bond notes. If you read the statement from the Minister of Finance, the mid-year fiscal statement, things are not easy. So this affects the macro and this affects the whole outlook. But let me first go from the medium term, and that is still what we had there, basically. I mean, I have a PowerPoint, maybe it's easy if you put it up. Basically, I mean, there's 5 points or 6 points. Zimbabwe is well placed for inclusive economic growth. I mean, the income distribution here, if you use the Gini coefficient, which is a standard way of looking at income distribution, the income distribution here is still better than in other countries in the region. I mean, if you look at countries, if you do a regional comparison, these are 2011-12 data, but it is still valid, I think, because these things don't change that quickly. Then you have to just go down to this. So if you, previous slide. So if you look at Zimbabwe, lower income, lower Gini coefficient is better. So South Africa. So in many respects, this has been achieved at very high cost. If you look at what happened between 2000 and 2008, it was very dramatic, very high cost. But the income distribution and the asset distribution it puts Zimbabwe in a good place, and that's a position of strength. So let me also give you the good news. There are things that are still very strong in this country. But then if you go to the next slide, if you look at recent, 2012, 2013, poverty was declining. But if you look at 2015, and even more so this year, as you know better than I, poverty is going up. So you had a strong base, you still have it, but it is really being challenged at the moment. So if you go to the next slide, this is the growth rate. I mean, we presented here, this is the presentation from February. It's sort of, the growth rate was coming down, and if you look at, if you put in 2016, the decline comes down, it comes down even further. So, then, talking a bit more about growth, next slide please. I'm just going quickly through it. It is, you had really quite strong growth, you know immediately about dollarization that came down. Services provided really a stabilizing factor. You had agriculture that was volatile, is typically volatile. It's not unusual, particularly if you have your irrigation facilities and your cushions have diminished a bit, so your agriculture is volatile. Your industry, which also has a component of mining, last year was negative. Industry with mining in it is probably going to be positive this year. So it's one of the few sort of bright spots. Services is still going to be positive, but it's not as positive as we had hoped it to be. And agriculture is negative. But then on agriculture is not as bad as it was earlier. Earlier we thought it was going down this year by 10%. Now we agreed with the Ministry of Finance that it's probably going to be in the range of minus 4.2%. So things are tough this year, but maybe not as tough as we thought a couple of months ago. So I'm trying to also say, sort of positive things. Maybe next slide. Yeah, this is the story. I mean, I put some pictures in there, and because, I mean, these are people where you talk about. I mean, you're the medical profession. In the end, we talk about human beings, about people. And that's why I think if we talk about services, yeah, it sounds abstract. But these are just people working in offices, trying to do sort of, typically it's a more educated workforce, but if there's cleaning, it's also a service. So it's a variety of things. Next slide, please. So this is the same story about how agriculture growth is volatile. Next slide. I'm just going quickly through it. This is then one of the key points where we're coming to. That's why did growth come down so much? It's partly a lack of investment. You saw in 2012 when really sort of confidence evaporating and investment came down, and then it sort of stabilized at this level, way below the average for sub-Saharan Africa. But if you see it now, this year investment will suffer again. So we expect to see quite a sharp drop there for confidence reasons, for lack of access to finance, for a number of reasons. And that will then sort of affect you. If you don't invest, it affects your future growth rate again. So maybe next slide. And this is one of the key constraints. What was happening in Zimbabwe over the past couple of years? You were keeping up consumption by borrowing abroad. You were borrowing and selling assets in a sense to keep up your consumption and your living standards. And you can have a big current account deficit if you invest it. Then it can be sustainable. You can borrow abroad, you invest, and then you produce and you're sustainable. That was not what was happening here. You were on a completely unsustainable path before the latest bad news hit you. So you were already on a vulnerable position, and then you got bad news. Yeah, then it's really not good. So yeah, in that sense, that would get the good. Let's go to the next slide, and then we come back to this one. So what happened over the years was that this current account deficit was financed. Foreigners, people abroad, who were happy to lend to Zimbabwe and expected to be repaid. Now, people who were lending to Zimbabwe as an aggregate, as a country, they're not so sure whether they get repaid. So they're not so keen to lend anymore. So your imports are coming down sharply, and you have a massive, if you go back to the previous slide if you don't mind, you have a mess this year. You had already quite a big current account adjustment, and this year you get a big one because your imports are coming down. It's partly SI64, but the more important thing is that it becomes difficult to finance imports. There's lots of demand for imports, lots of people who want to use things, but not so many people who have the money to pay for it. And therefore, if you don't pay for your imports, typically people stop supplying you. I mean, it's like if you don't pay your bills, your suppliers. I mean, it's the same here, and I can make it as a joke, but I'm well aware that this is a tough picture. It is really, it's not nice. It is. We can joke about it, but it is really a difficult macro situation. So and that is forced this contraction in imports that you see. And I mean, during the first 6 months of this year, sort of exports came down also with 9%. So you had your exports coming down, and your money to pay for imports was coming down, and on top of that, you had your imports coming down much faster. I mean, it's really an adjustment that's going on that is tough. I mean, but it was an unsustainable situation. So we were earlier this year already saying this is not sustainable. And if you have an unsustainable situation, typically sooner or later it changes. And it's like a. So we look at prices a little bit. I mean, prices are coming down. But these are the prices. What we have at the moment is a bit of a difficulty with reporting on prices. I believe the statistics from Zimstat. But what you have to keep in mind on the statistics is they measure reported prices. But if you go to a shop, and particularly if you go to services, if you go to your doctor and you say, well, I pay you with an interbank payment, he said, that's fine. But if you have cash dollars, I give you a 20% discount. So, and these things don't report in the prices. So if you have these mobile payments, these are the prices I think that are in there. But I think prices for people who pay in cash dollars actually quite a bit lower. So you have this sort of, but that's not really reported in the statistics. So and I think that it's difficult for Zimstad to pick that up. I mean, it is technically difficult. So prices, but I think they are still coming down in cash dollar terms. In interbank dollars, it's a bit more difficult. Let's go to the next slide. So what we had in earlier this year, we thought the financial sector was sort of gradually, they were gotten into a hole because of all these NPLs, these non-performing loans, people who had borrowed money from banks and were not paying back. That the banking sector was starting to climb out of it. Frankly, this is one area where we have to completely change our picture. The banks are not lending and they haven't got the money because people want to get their money out of the bank, they don't get their money out of the bank. So on banks, the picture has changed quite a bit. It's one of the areas where we are really figuring out how to look forward. Maybe let's go to the next slide. I go quickly through this because this is really why banks were previously not lending. This is really the story of that banks had lent to money, people to money, but then they were not getting repaid. That's what the NPLs basically say. But at the moment the issues are a bit more complicated. Let's go to the next one. They try to cover their cost by charging high fees, and that's still how they make money. They charge high fees. That's anybody who's trying to get money out of the bank. That's there. The authorities are working a little bit on that, but it's not that easy. Let's not divert there. So bank deposits are still going up. Even now, while anybody can get this money out of the bank, and aggregate deposits are still going up because there are still sort of money that flows even into the banking system. And there are so many restrictions on getting your money out that in aggregate it's still going up. So we have a difficult situation. And this is what we had earlier in the year, and since then it got quite a bit worse. Now we'll talk about that. So we had this large current account deficit that is really adjusting quite a bit, but it is very painful, that adjustment, so you get pain from that. You have low growth, and it has become lower. Our projection is being revised down quite a bit. And we have low investment, and it's coming down too. So you have really not a good immediate picture. And I want to say that, but I also want to say I'm in development, and in development you have to be positive, you have to be optimistic, otherwise you're in the wrong trade. And so I remain optimistic that we come through this hub, but I just also people like you who are basically in the spending department. I mean, you also mobilize fees and charges, I know, but the issue is that yes, the immediate future is not that rosy, so don't give the Ministry of Finance too hard a time, because there is really not that much flexibility. I'm coming to that. So maybe let's come to that. Let's go to the next one. What do we have here? So far, Zimbabwe had, after dollarization, a pretty responsible fiscal policy. It was really, the fiscal deficit was very small, and it was very responsible. It was also, frankly, not much of a choice because the government couldn't borrow that much from people. I mean, there were a few countries, China, India, some people were still lending. The banking system was small, so if you haven't got access to money and you want to run your financial policy, you're really constrained. That was so far. That has changed. As you may know, the mid-year fiscal statement, the minister reported that the first 6 months the deficit was 650 million. Well, 650 million with a GDP of about 14 billion. That's about 4% of GDP or more. So you suddenly see this red line going choom, and that's only the first 6 months of the year. And he said it's going to be, could be under unchanged policies. Yes, it is against slide, sorry. Is that under unchanged policies, it would go to 1 billion according to the Ministry of Finance. Well, that's here somewhere. So suddenly you have, after those sort of where things were really under control, choom, a big fiscal deficit. And that is partly the underlying stuff in the banking sector. It is the stuff that you see in the banking sector is that the government has been trying to resolve some long-standing issues, including RBZ debt, including arrears that farmers who had provided grain to the grain marketing board who had not been paid, and these people are getting paid. And that shows up in a big deficit. Outsiders are not lending to Zimbabwe that much, a little bit. So what's happening? These things get borrowed from the banking system. What happens is the banking system lends to the government. Well, if you have money in the bank, it's very difficult to get it out. And that is sort of, it's a bit more complicated there, but let's simplify. That if the banking system has dollars and lends them to the government, and you have deposits in the bank, you can't get them out. Or you can get out a little bit, but not that much. So these are the sort of pressures that the Ministry of Finance has really, in my view, tried to address some of the long-standing issues that are there. Because of the way it was done and some other issues, maybe some things were done too quickly, and there is a lot of, in practice, a lot of money was from the board, from the banking sector, and that's why you can't get it out. And that provides now a serious constraint on how much money that the government cannot borrow that much more money from the banking system. The system blows up, or it's a simplification, but it's still more or less the key message. And I'm saying that here in those sort of crude terms, because don't expect that much more money from the fiscus in the short run. In the long run, I'm optimistic. And in the long run, all sorts of good things can happen. But in the short run, the situation is pretty tight. That's why the minute you see the process within the government. Maybe let's go to the... So that is a key message that I think I want to deliver here to you as a spending department. I mean, but try to balance it with positive messages, because it's not all dire, and I've worked in other countries in Africa, and this place is still way ahead of so many places in Africa. So this is comparing fiscal revenues to, as a share of GDP, to the average in Sub-Saharan Africa. Here the fiscus collects much more revenue than the average in Africa. You have a functioning state. Some countries, I worked for 5 years in the Congo, the Democratic Republic of Congo, it's not really a functional state. And you have a functional state, but then you have to sort of keep the controls on spending and on the deficit and all that. So, and I don't know whether I've got that in this. You have a big state. That is basically one of our key messages, because, and certainly compared to the rest of Africa. But even I think worldwide you're in really the middle income country size of state, because you have the fiscal, which we just saw, is much bigger, 50% bigger than the rest of Africa. That's central government. On top of that you have local governments. We have now collected the data. Local governments have about 800 million in revenues and expenditures. On top of that you have state-owned enterprises. On top of that, you have what's typically integrated in other countries in the fiscus is contributions by development partners. So if you add up the whole thing, that's where we're working on at the moment, and I haven't got a precise number, but yet, I will have soon. But the government, the state, the public sector in Zimbabwe is, as a share of GDP, is significantly bigger than in other countries in Africa, and it's really like a middle-income country. But in a middle-income country, you can do these nice redistributional things that you talked about. Here, I think that is still really the challenge at the moment, because what you see, and this is in health, but in education it's even more so. So what you have is the budget, and in 2001, and it really developed over the last 15, 16 years, that as the budget shrank, or during hyperinflation it shrank, and now it is sort of trying to come back. But then about, in your sector, about half is paid by the budget, and then you have development partners, and then you have all these fees and charges and use. And in education, anybody who has kids here in Zimbabwe knows all the school fees. The amount of money that Zimbabwe spends on primary and secondary education, I think is secondary to none throughout Africa. I mean, we are still comparing numbers, but it is, the government spends 6.5% of GDP on primary and secondary education. And schools and fees and charges another 6.5%. So you spend 13% on primary and secondary education. It's massive. And health, you get a bit more money in health from development partners, which is normal. But you have these massive youth environments, and I agree with one of the speakers who said that this sort of you need to this way of financing your sector is typically regressive. It typically you get what you pay for, and it means that the people who can pay a lot get good service, and the people who can't pay very much don't get very good service. I think in health there are already a bit more compensating measures than in education, to be quite frank. But these are the two key social sectors where you need to look at these how do you manage this? And this is in my mind, these equity aspects are one of the key challenges, because the government has sort of, whether it wanted or not, I mean with economics it's always partly policy and partly sort of responding to pressures. I don't think it is really that the government says let's have a nice and regressive system. It doesn't work like that. It just prices were accommodating, revenues fell, and people were allowed to use charges and so forth. And then you get a system like this. A system that is half based on user fees, and then you need to think about, or in education, in health it's still a little bit less, in education it's really half, and then you need to look at the equity aspects and how do you live service. And then you have the last slide on education, but we can keep it on health. Then you really have to challenge innovative strategies together with your development partners. Even if the development partners, maybe they finance a quarter or something. I would have to look at the underlying data. But you really need to work with these partners, work with what the people who pay the fees, what are they willing to accept in terms of equity measures, and what you can do with the fiscus. Fiscus-based mostly salaries.
For these and other stories, visit our website www.263chat.com. Follow us on Twitter @263chat and like our Facebook page 263chat.